Talk to us about what you guys are doing. It's because you see, what, a gap in kind of the lending arena.
Correct. So we're a full-service development firm, and this lending platform seems to be a natural extension of what we're doing. We're a borrower of very large loans. Our projects are usually in the billions of dollars, and we noticed that over time there are fewer and fewer banks that can handle the type of projects that we need to finance. So we actually were approached by some capital partners in the market, and we decided to launch this business a couple of years ago and put it in place.
And so why should you be lending if the banks are not? Maybe there's a reason the banks aren't lending. You know, it's not a good loan.
We have a lot of in-house expertise. We are the borrowers. We do this stuff every day. We have a whole office of people that know how to do construction, how to prepare loan requests. And so when a borrower is looking to get the money from us, we know how to underwrite that really well. We have our experts go in and sit with their construction folks, and it's actually a relief to the borrower to have someone who knows what they're doing sit with them and can really, rationalize it with them.
Marty, what kind of projects are you looking to do? I'm just curious in this environment. And have you closed a deal yet?
So we just started. We just got all our licenses, and we have a pipeline already of about $5 billion, mostly of New York metro area projects, large construction loans, value-add projects, and some land acquisitions.
Does that mean you haven't closed a deal yet?
We have not closed a deal yet. It takes time because you have to do loan documents and actually close.
Do you anticipate doing it before the end of the year?
No, I think the first quarter of next year we'll have a couple of loan closings.
To what extent does the very existence of your business, the business you're going into here, reflect the cycle in real estate? Does it indicate are we getting a little frothy?
No, I think if we had been in this business 2 years ago, we would have closed many loans by now. There's always going to be loans being done. There's always going to be development projects. You just have to pick the ones that you believe are the right ones to get done.
What do you think about the cycle? Where are we in it? Use the innings. We always use the innings. Where are we in the innings of baseball?
So it's a really
are there going to be extra innings?
It's a tough question because when you look at New York City, it's such a dynamic market. And when you talk about industrial, you talk about retail. It depends on where you are in the market. Residential condos. If you build large residential condos right now, you're going to probably sit with them for a while. If you build small residential condominiums, it might be a market that's a niche right now and can sell really well. So it's hard to say what inning you're in unless you really specify the product you're talking about.
So what are the types of projects, Marty, that you're looking for kind of in terms of size and what type of projects? It sounds like, residential, commercial, what are you looking for?
So ideally we can do all, but ideally we want very large projects. We're trying to do projects that are close to $1 billion so that we can really put out a lot of money. And they're generally construction projects in the hundreds of millions of dollars and residential, mixed use, office, retail. We're looking at it all.
Is the Fed helping you in your new business? I mean, there was just a report at Bloomberg last night. The Fed is really telling the banks right now, you're going too far in your leverage. You're going too far. You're getting into risky loans. Does that really vacate that area and let you step in?
I think part of that gap was created by all the regulations that the Fed has put on, the banks. So whether it's lending reserves or how they underwrite, it's helped create this gap in the market.
How involved are you guys going to be in the deals? Is it just a case of money, financial, or are you going to be all in kind of?
It really depends on the borrower. So we're going to underwrite it and we're going to make the loan, and then we step away and we just collect our interest, although we monitor very closely. If they want our help, we can always do that. Generally, they don't want our help. When
you finance these projects, you obviously want to know, are you going to get paid your money back?
Yeah.
And that depends on, for example, companies going in and being able to pay leases or engage in leases. How sensitive are you to where we are in the business climate overall and whether companies are on the upswing in their ability to take real estate and pay for it?
Right. So as a developer, I always have to worry about not only paying back the bank, but am I going to get my money back as the equity investor plus a return for me and my investors? As a lender, I just have to get my money back on the loan. So it's a very different underwriting. So I can take a bigger risk as a lender as I could as an equity investor.
Well, but is what supports that repayment the property itself, or is it the creditworthiness of the person borrowing the money, the developer?
Generally the property. We don't want to take the property back, and we don't want to have to go after the developer. We want the project to be successful, and we're only investing in projects we think will be successful on their own.
But then you come back to it because the value of that project itself depends upon their ability to get the rents, for example.
Absolutely. So whether they're renting office space or they're selling condos or renting apartments, we have to make sure that underwriting comes through.